56 pence sterling.
As we've mentioned this morning, the Reserve Bank Governor has once again flagged that more interest rate rises are on the way.
So what comes next? For more, we're joined by Rod North from Bourse Communications. Rod, thank you very much for joining us.
Good morning.
It just seems like it's just a matter of time now, how much and how many rate rises there'll be. Is that right? Is that what economists are saying?
Yes, I think that's pretty much now the take that you can have on it from the meeting yesterday in Perth with the Reserve Bank Governor. He made it pretty clear that rates are now on the way up and we're in the recovery cycle, and the expectation, I suppose, is that the emergency setting that we've been in is now going to be moving back towards what the Reserve Bank refers to as an easy setting, and that setting pretty much indicates that we'll see rates move probably in November, December and then in February, because there's a break in the January period.
But he's basically said this before. Why was this news again yesterday?
Well, I suppose, Joe, it's the confirmation of it, post the trend changing, because up until we saw last week's rate increase, we really didn't know that the rates were absolutely definitely going to go up. Now that we've seen that 25 basis points or 0.25% increase last week, and the confirmation is that the trend is now up. So people have got to get used to that fact. And I think it's important that people need to sort of factor in that the increase that we're likely to see over the next 12 months or so could bring the rates up to somewhere between 4 and 5%.
So the rates are obviously rising, but what danger is there that it could rise too fast? How much of an eye are they now planning to keep on this and not repeat the mistakes of the past?
Well, they have to be very vigilant, and I think it was interesting having a really good read of the information that the Reserve Bank put out in relation to that announcement yesterday, or that discussion yesterday in Perth, because it made it very clear what the process in terms of the assessment that the Reserve Bank Governor and their team does in relation to those assessments. And there's lots of data that's looked at constantly, and I mean the big concerns are to keep an eye on inflation. Inflation's not so much of a worry at the moment because it's around 1.75%. The Reserve Bank band is between 2 and 3%, and of course unemployment. I mean, we've seen unemployment drop from 5.8 to 5.7, but we've still got 3, 4, 5 months ahead of us where that trend could still change and may go against us. So I think the key thing people need to remember with monetary policy is the Reserve Bank Governor and the board always has the option to look at the data and then decide what they're going to do. So even though rates might be going up, if things come out of left field and the global financial crisis then deepens in any way and affects Australia, the Reserve Bank and the board have that opportunity to always change their view, and rates could come down at some stage again in the future.
Now, the NAB came out with this announcement yesterday about a cut in fees. Is that a bit of a surprise, because competition, we've been reporting so much recently that competition has declined?
Well, it's interesting because the fees are really where customers with over the limits and so forth have been really largely slugged for many years, and I think the banks are sort of providing a bit of a concession there. I think they're conscious of the fact that rates are going to go up, but it's 6 of one, half a dozen of the other. Depositors with the bank want to see rates go up, and retirees certainly, if they're in cash. People that have got mortgages don't want to see rates go up, but banks, I think, are trying to be a bit more benevolent in this sort of climate and say, let's cut out some of the fees and show some sort of concessions. But the thing that has always interested me is that at the beginning of the global financial crisis, you had banks with 60% of the mortgage market. Now you've got them with 90%, so it puts them in a very sort of commanding position.
And what can we expect today?
I think we can expect the market to continue to move up. Wall Street was pretty positive on profit results last night, so our market's likely to go up and heading very close to that 5,000.
Rod North, thank you very much for joining us.
Thank you.
Coming up.